Okay. What else? Berkshire, meh. And bonds, let's take a look at TLT. I did exit my position on TLT. I was up here into the 89.90 zone. I got out for about 85% of my max credit on a diagonal spread, which I was pretty happy with. I'm now taking those profits and allocating more to gold and silver. The US 10-year, we did have a nice little chunk to the downside. The Fed has been cutting rates. So far, we haven't seen a big change in the 10-year. So I don't know if the market was expecting, oh, the 10-year should be falling aggressively because the Fed's going to cut. Well, it hasn't happened yet. At the same time, the 10-year hasn't been ripping higher like it did back in September of last year, and that kind of remains to be seen. Are we going to see October, November with higher yields? Or are we going to see October, November with, sideways? TBT. That's to be determined. Okay, so I'll find out. But I'm watching, and I think this is something we have to pay attention to as far as risk on, risk off. It's a big disappointment if yields rise. It's a big disappointment because it's not improving the longer term borrowing costs. It's not improving the long end of the curve. Look, the government can declare a national emergency. It doesn't necessarily mean that the bond market and bond yields are going to change. So the long end of the curve, short end of the curve, all this stuff is up for grabs right now. But what it is doing is it's showing that there is stress in the bond market because less and less flows are coming in to buy and hold long-term bonds. Short-term bonds, very different. Short-term bonds are flush because everyone wants short-term bonds because we have some of the highest yields and most stable markets in the world. But long-term bonds, I think, is showing that it is to use a metaphor, kind of the melting ice cube of they're going to be worth less with the debasement of our currency. If we're losing purchasing power debasing our currency, I mean, what good is holding something that's backing fiat versus holding something like gold or silver or Bitcoin that's backing something else that stands for something else? So anyway, this is something to keep an eye out for, but gold, silver, Bitcoin is a good way to hedge that. Being long assets, good way to hedge that. Stay long the S&P, just looking at dips, understanding that short term we could have some corrections along the way. Mortgages have come down a decent amount. This is 30-year fixed down to 6.26. That's a pretty good improvement. I'm curious if we can get below a sub 6. Maybe that increases some housing activity. That is enough to move the needle in the economy. But again, to be determined, whether or not we are going to see the 10-year yields go higher or lower will dictate whether or not the mortgage rates come down further or start to stay sticky around the 6.25 zone. Currency-wise, I'm just going to go DXY again. I think the DXY and the Japanese yen, so dollar index and the Japanese basket, I think those are the two currencies I'm watching the closest. Right now, I think that the dollar, if we catch a bit of a short-term bid to the upside, dollar catches a bid here, stop